This video is brought to you in partnership with Henley Partners, the global leader in citizenship and residency investing. Email info@monetary-matters.com for more information. Now, let's get into today's interview. With rising government deficits, multiple global geopolitical conflicts, and resulting plans to tax wealth, unrealized capital gains, and redomiciling, commonly known as exit taxes, it's no wonder that the business of citizenship and residency investing is in a massive bull market. I am very pleased to welcome to Monetary Matters Basil Mohr, head of the Americas for the global leaders in citizenship and residency investing at Henley Partners. Basil, great to see you. My first question is, what is citizenship and residency investing, and why are people doing it?
So great question, and thank you, Jack, for having me on this call. I love to define what is residency and citizenship by investment because it's often unknown to the general public. So governments around the world, they have programs that are catered to attract foreign direct investment. So the United States has their own version of this program. So to make it more relative, some people on this call might know the EB5, where they have a program that you can invest a certain amount into regional centers or to create a certain amount of jobs, and that will provide a pathway to a green card. So every country around the world has something similar. So there are over 100 different investment migration programs in the world that are attracting foreign direct investment from investors. And when investors invest in real estate in another country, they donate to another country, or also known as non-refundable contributions, or they start a business in another country. The country thanks them for stimulating their economy with a residence or a citizenship, depending on the government framework. At Henley Partners, what we do is we have two main lines of business. The first is essentially advising governments on the creation of these programs to make them attractive to high net worth investors. And the second line of business is our private client practice, where we advise high net worth and ultra high net worth individuals all around the world on passport or residency diversification to plan for next generations. So we know exactly the framework that will be attractive to foreign direct investors. So we're consistently working with several government boards around the world, making sure that these programs are attractive. So out of the 100 in the world that are being offered, or 100 plus, we deal with the top tier 45, which are the most streamlined and reputable countries.
So the amount of money differs, and the type of investment matters as well. In some cases, you own bonds. In some instances, it's shares. Some instances, as you said, real estate. And then also in some a non-refundable contribution or a gift. Tell us just about how it varies, and what are the most expensive, and what are the least expensive options.
Sure. So the prices can vary depending on the work involved as well as the country. So it can be as low as 100,000 in terms of investment or non-refundable contribution, all the way to around 8 million euro investment. So the most expensive to start with that is Austria. Austria has a program called Citizenship by Merit, where they don't necessarily specify an amount. However, Henley Partners, as we've been working with the Austrian government for some time, we know that the amounts that would be accepted to grant citizenship through merit. Now, evidently, it has to be an important project that's invested in. But the investment thresholds, to keep it simple, is a 3.5 million euro contribution into a not-for-profit organization or similar into Austria following one of Austria's goals, or if a for-profit route would be an 8 million euro investment into Austrian private companies in order to help stimulate the economy. And both routes can provide a citizenship to the investor in a period of 2 to 4 years, depending on government processing time and the project at hand. So that would be one of the most top tier programs. However, if I were to show you the contrast, that in the Caribbean, so we're looking at the Eastern Caribbean, particularly Antigua and Barbuda, St. Kitts and Nevis, St. Lucia, Dominica, Grenada, they all have quite flexible programs where there's two different options for the investors, usually. So you'll have a real estate option for real estate investors, as well as you would have a non-refundable contribution option, also known as a donation. So these options will grant citizenship in a period of usually around, I would say with government processing, that varies between 6 and 12 months. So quite quick, not much physical presence in the country, a nice alternative passport that can be at ease and can be done at distance from the United States. So it can be as low as that. However, it really depends on the value proposition. So if you're going to be looking for a citizenship in a country that's a part of the European Union, evidently that would be a more expensive play. Because in the European Union, by getting a citizenship would give you access to not only that one country, but 27 countries in the European Union. So I like to contrast it as well a little bit with the United States, right? With your US passport, you have access to 50 states. You can live, you can work, you can study. in any of the 50 states. In the European Union, you're looking at 27 different countries that you can choose from. And if taxes is a concern, it could be 27 tax jurisdictions to choose from. It could be retirement options, it could be education options for the children, employment options for the children, and as well a hedge against geopolitical risk in the event of a necessary relocation. So evidently, Europe is one of the top tier programs, whether we're looking at Portugal, Austria, or Malta, that Americans are applying for to get that diversification through another passport.
And what are some of the reasons now, that the most dominant reasons why people are relocating or exploring getting a new passport through these programs? You referenced a few: education, diversification, tax treatment, and the like. But are the reasons now different than, let's say, 2004, 20 years ago? How have things changed?
Great question, Jack. Yes, it has changed. So historically, our industry with providing pathways to an alternative residence or citizenship through investment was mainly for second world countries, third world countries wanting to better their life for education, lifestyle, was more of a relocation play. Today, it became a first world product where first world countries such as the United States, Canada, even the UK, the citizens are looking for plan B. They're not actually relocating, but they want to relocate in the event they need to. So the main driver is an insurance policy, hedge against geopolitical risk. When we're seeing discrimination, when we're seeing a war emerge in Russia and Ukraine, in the Middle East, it starts to touch home. And you start to think, well, it's a little bit ignorant to think that this will never happen to us. Maybe I can predict the next 5 years with the upcoming elections that can be even more difficult. But can I really predict the next 20, the next 30? My children, my grandchildren, will they all be safe? So the main reason is to have a hedge against geopolitical risk and a plan B in the event that people would need to relocate. The secondary reason for Americans, if we're focusing on them, is lifestyle. So in the event, right now with the US passport, I believe it's 187 countries that we can travel to visa free. So without any limitation, we can travel almost all around the globe. Now, during COVID, that dropped down, the 187 country score that we can travel to visa free dropped down to 61. So Americans felt very limited and all of a sudden said, well, I guess I'm not in control. I guess, maybe I should have an alternative travel document to travel in the event I need to. Also, I want my kids to have it. I want my cousins to have it. I want my parents to have it. So that if this COVID happens again or a war emerges, they have an exit strategy.
And what are the various tax treatments, and like what are, I guess it is, if you move from a high tax country to a low tax country, that may be an advantage. But just tell us about that.
Sure, sure. So as a disclosure, at Henley Partners, we don't provide tax advice, but I can touch on it at the high level. So United States, U.S. citizens are taxed on worldwide income. So for U.S. citizens, it's not necessarily a tax play as the ultimate driver. But in the event it is a tax play, then usually a renunciation of the citizenship would be needed in order to obtain another tax residency somewhere else to benefit from. However, the US citizens that do decide to do that, they go into low tax jurisdictions such as the UAE, where they'd like to domicile, or they're looking at Italy that has a lump sum tax regime of 200,000 per year. Greece has a 100,000 per year lump sum tax regime, so that's often looked at as a residence. Switzerland starts at 250,000 Swiss francs, depending on the canton. So we're looking at a lump sum tax regime there as well. So those would be the hot spots. There are others, such as the Caribbean, where St. Kitts doesn't have personal taxes, right? Income tax. So basically, this would need a tax strategist, but it is definitely a strategy for those that are willing to analyze their exit tax in the event they would like to renounce, or they have a large liquidity event in order to tax domicile themselves somewhere else. However, some of my clients are preparing, saying, well, I don't want to do this right now. I don't want the exit right now. But in the event there is a future tax reform, I would like to have a citizenship or an option to live somewhere else so I can tax domicile myself then.
And so it's a lot from countries that are not the U.S. that have high or rising taxes, and it's moving into alternatively taxed regimes. As you say, you don't give tax advice, but Basil, I am seeing a lot of headlines about a rise in taxes. For example, California, they don't officially have an exit tax, but a piece in the San Francisco Chronicle about how it can tax people who move away from California. In the Netherlands, I proposed an exit tax. In the UK, there's an exit tax. We talked about in the beginning how a lot of governments, such as the U.S., our government is very indebted, and there are talks about filling that gap by taxes on wealth, including unrealized gains. Is this becoming a bigger issue with some of your clients?
Certainly, certainly. So we deal with a lot of global citizens that have multiple residencies and citizenships. Now, what we're hearing also to add to your list is Brazil. So the Brazilian government is imposing many different tax rules. I wouldn't be able to go into detail. However, a wealth tax is on the table, exit tax is on the table, reforms are on the table. So a lot of the wealthy Brazilians are looking for alternatives, right? Sometimes to avoid the tax and sometimes to just diversify in the event there's a tax reform that they're not comfortable with. This is also a theme throughout Latin America where the citizens are quite uncertain of the tax landscape in the future. So this kind of ties into the diversification aspect that I mentioned earlier. That we can diversify everything. We can diversify our investments. We have our international real estate. We have our insurance policies. We have our trusts. We have our stocks, bonds, etc. But how do we diversify our governments? How can we predict tax reforms? And really, the only way to do that is to be a national of another country or have the option to tax domicile yourself somewhere else. So yes, even though there is a trend that governments do want to provide those tax reforms, some countries like the UAE that have very very favorable tax regimes are inheriting a lot of these wealthy individuals. So the UK has the non-dom tax regime that's often in the news lately might be ending in 2025. We don't have the details of that yet. However, if that is the case, Henley Partners does expect a huge amount of high net worth residents of the UK to relocate either to Italy for the non-dom tax regime or to the UAE. And some are getting residencies in multiple locations because we can't really predict if the UAE will have a tax reform or Italy will eventually raise, right? Because Italy saw the demand that they were getting with all these high net worth wanting tax residency, and they used to have a barrier of 100,000. Well, they said, well, now it's 200 because we see the demand. So, in essence, there is a trend globally, but the best way to protect ourselves, our assets, our families, and as well to protect from constantly changing tax regimes is to obtain not just one residency or citizenship, but multiple. And the US government has no problem with US citizens having multiple citizenships and residencies.
And let's call countries such as the UK, where high net worth individuals are leaving, let's call those bear market countries. And let's call countries such as the UAE or Italy, where high net worth individuals are getting passports, they're moving in, there's an inflow. Let's call those bull market countries. What countries are bull market countries other than the UAE or in Italy, where people are moving towards them? And which countries are, such as the UK, are bear market countries where people are leaving? There is an exodus from those countries.
So, great question. Let me just pull that up. We actually have some data that I can share with you after. But the outflow projections in 2024, so talking about the bear market countries. So, you're looking at China, UK, India, South Korea, Russia, Brazil, South Africa, Taiwan, Nigeria, and Vietnam are the top 10 countries that are losing the most millionaires in 2024. Now, who are inheriting most of these millionaires? We're looking at the UAE taking the number one spot in terms of projection in 2024. We have the USA, still a very attractive area to relocate to for many countries. So they're inheriting many millionaires. You have Singapore as the number three spot, Canada, Australia. However, Italy, Switzerland, and Greece are on the list as well due to their tax regimes and their lump sum tax regime. Portugal, a huge contributor to their golden visa program. And lastly, Japan. So those are the top 10 inflow countries that we expect to receive the most millionaires.
I just pulled up about a lot of free information on your website about Italy, the investor visa program. They have to satisfy one of three following requirements: either 500,000 euros in Italian shares, or half of that, 250,000, if you're investing in innovative startups, or 1 million in investments in public projects of the public interest in Italy, or a minimum of $2 million in Italian government bonds. So if some of your clients, Basel, obviously 2 million euros is a lot, but if they have a large holding, a large family office, instead of holding, I'm sure they have a lot of cash and cash equivalents. Instead, they just hold a portion. Instead of in U.S. Treasury bills, they hold them in Italian government bonds. All they do have to do is just switch their allocation from U.S. Treasury bonds to Italian government bonds.
Italy has multiple options for investors, as does Portugal, as does Spain. So having options are great, but the most popular investments in Italy would be a publicly traded stock of 500,000 euros, right? Which is pretty easy to do. Some clients invest in Ferrari or an Italian bank, as long as it's on the Italy Stock Exchange. Those that are looking for more cost-effective routes in Italy, there are two routes, in fact. One would be a retirement pension. So there could be, without an investment requirement, if you meet the criteria of receiving passive income, it is a possibility to get a residence in Italy without an investment. However, that would require physical presence within Italy, right? So you'd have to live there for a certain amount of time. Now, in terms of the cheapest investment threshold, there's also startup companies. So there's certain eligible startup companies that Italy is promoting. That if you invest 250,000 into these startups, then that would also make you eligible for a residence, and you can get a residence in Italy in a matter of 4 months. It's quite an easy process.
Italy is interesting. Tell us about the Portuguese passport.
So the Portugal Golden Visa program is one of the most popular programs in the world, in fact, as Portugal is a sweet spot where it gives you a reasonable investment threshold and a pathway to actually get the passport. So I'd like to back up a little bit and define what is a residency and what is a citizenship, just for our viewers. So a residency is the right to live, work, often study within the country. It's usually subject to certain conditions and, in theory, can be revoked or not renewed. Now, if you get a citizenship of a country, this is as if you were born in the country most of the time, where you have the right to vote, it's non revocable, it's a travel document, you can travel the world, and you can pass it on to next generations. Whereas a residency does not necessarily have all those factors aside from the right to live. A citizenship can also provide you the right to live in multiple countries, such as in the European Union. If you get a citizenship of Portugal, you can live in 27 countries. But if you get the residence in Portugal, that only allows you to live in Portugal, right? So it's two different things. So what's nice about the Portugal program is it provides a pathway to get that citizenship, which gives you access to the European Union and 27 countries to reside in, with an investment starting at 200,000 if it's a non-refundable contribution, or a 500,000 investment into a venture capital fund in Portugal. So you can simply extend your portfolio, invest in Portugal. Evidently, 60% of the portfolio at the minimum needs to be invested within the country, and the portfolio managers can decide up to 40% to invest outside. So it's diversifying your portfolio. You invest in Portugal, then you get a golden visa. Once you get that golden visa, the whole family has the right to live, work, study, have access to healthcare in the country. They need to hold that residence for a period of 5 years. And at that 5 year mark, they're able to apply for their citizenship. There's other criteria that's needed, such as visiting Portugal a minimum of 2 weeks per year in that 5 year period. So that does not deem you a tax resident, which is important for our investors. And the second point is to learn a basic level of Portuguese, because the Portuguese government wants you to have ties prior to granting you citizenship. So it's A2 level 2 out of 5. So a lot of American families are looking at this saying, I can keep my job here. I can still have my kids go to school, and I can slowly start my way to a citizenship of the European Union as long as I have time. Now, for those that the timeline of 5 to 7 years is a bit too long, if we consider government processing time, sometimes they look at Malta. Malta has a program that also provides a pathway to citizenship, but much more accelerated. So you're looking at under 18 months. It can be as quickly as 15, but usually I like to say under 18 months. Citizenship can be obtained for the family with the dependents with only 3 weeks of visitation. Mind you, it can be more, but generally 3 weeks of visitation within the country can demonstrate those ties. Evidently, it's encouraged to have more ties with the country in order to grant that citizenship, but our team guides them throughout that way. Now, with the 3 weeks in the country, with a time period of about a year and a half, demonstrating those ties, having a property within the country, this can make you eligible for a citizenship of Malta, which is also part of the European Union for those who don't know, and can provide access to the 27 countries. However, it does come at a higher price point as it's accelerated. There's a stringent due diligence that the Maltese government runs, and it's quite a valuable program. So we're looking at for a family of four, as a ballpark figure, around 1.3 million euros, which would not necessarily be an investment. It would be an investment in the country as a non-refundable contribution to the Maltese fund that would go to build infrastructure, that would go to help schools or whatever the government would have as a project for that year. So a common misconception with these types of programs is selling passports. That's not what these countries are doing. It's an exchange for economic stimulation. where they're looking for highly qualified individuals that pass a stringent due diligence to get approved in order to allow them to invest in their country. And as a thank you, they provide that citizenship or that residency. So it's not anybody can walk in, throw 1.3 million and get a citizenship. There is an intense due diligence process in order to do that, where the Maltese government is only accepting law-abiding citizens, alongside Portugal as well and other countries with similar frameworks.
So what you're saying, it's not only about the money. They also want you to meet other certain standards. If you are on the run, for example, this is not, these programs are not for you. That is good to say. Basel, we talked about the advantages, diversification, tax advantages, but what about the opportunities of financial economic return? Pursuing profit. What are these different opportunities, and how do they compare? I referenced earlier buying Italian government bonds instead of U.S. Treasury bonds. How do they analyze, for example, the return profile of a Portuguese venture capital fund versus a venture capital fund in Silicon Valley, which perhaps maybe our listeners are more familiar with, or a Austrian private equity firm?
So I love the question, Jack. Basically, many clients approach us trying to generate a lot of return through these programs. They want the win-win situation. There's no free lunch. Basically, how it works is your return is that residency or citizenship. The Portuguese economy is not necessarily the U.S. economy, right? It's a much smaller economy, doesn't have as many sectors, has a growing tech sector, but much smaller than the United States, has a big agricultural sector. So to expect high returns from Portugal is not likely. However, to have stable returns, diversification, return of capital, these are all things that are possible. Now, there are over 20 different venture capital funds, if not more, in Portugal to choose from. So it's up to the investor to do their due diligence. But to expect the 10x or 20x that they do in the United States is not realistic expectations. So we manage those expectations from the get-go, saying that you are investing in another country. The goal is to stimulate their economy, and you cannot compare with a VC fund in the US. However, there are other programs that focus on real estate, right, where you'll have a lot more control. So in the event you're looking for real estate in Madeira or somewhere in Spain, or if you're looking in Greece, they also have a residency through real estate, or Turkey, they have residency through real estate. Then you can have a bit more control on your return potential by investing in that sector. However, I always stress that these programs are not necessarily catered to generate lots of return. Your goal is to generate some return, obtain your residence and citizenship with the benefit to the country, and then obviously focus on returning your capital, and then moving on. Right? I would always recommend, and I've told them many times, that if you're looking for the 10x and you're looking at this as an investment opportunity, it's not it. The goal is really to obtain that residence or citizenship because it provides so much value than a 10x would ever do in Silicon Valley.
I really like that you're grounding expectations. You said a Portuguese venture capital fund may not be able to offer those 10 to 20 times return that Silicon Valley venture funds have done. I might say Silicon Valley venture firms in 2024 might not be able to deliver those returns. So it's important to ground people's expectations anywhere. But just to put a point on it, Basil, that you're saying theoretically people, because people think of buying passports, and you said it is not that, but theoretically people could invest financial assets in a country and actually generate returns, so they have more money than they started with, and they get a passport alongside that.
Correct. It's just, for US investors, especially the high net worth we deal with, they're used to the framework in the US where it's a little bit easier to make return. Whereas in Europe, it's not the same economy. Or in these other countries that are seeking this stimulation, you wouldn't necessarily generate as much return. But yes, definitely you can generate return in real estate internationally. It really just depends on the asset class you decide to invest in. But absolutely, we have clients that are buying real estate in the UAE to get a golden visa. We have them investing in Greece and Spain and in Turkey all at once, just to have a portfolio of residencies, but as well real estate. So this is definitely a possibility.
Hey everyone, you heard Basel. The great millionaire migration has begun. 128,000 millionaires, the most ever, are expected to relocate countries in 2024. Whether that's for tax reasons, geopolitical diversification, or for your family's legacy, it can be extremely complex and difficult to navigate the over 100 programs available for citizenship and residency investing. That's why I've partnered with Henley Partners. They only work with the most reputable programs, and they know these programs inside and out because in many cases they work directly with the governments to help design them. They do the paperwork for you, they match you with the right program, they connect you with the investment, tax, and real estate professionals in these countries so that you and your family can seamlessly diversify your geographic exposure. Now, I'm not saying that this is something that everybody needs to do, but if you are considering investing in citizenship or residency, there is nobody better to work with than Henley Partners. So if you're interested in learning more, email me at info@monetary-matters.com and I'll connect you directly with Basil. It helps me and it helps the show if you connect through us. That's info@monetary-matters.com. Don't forget the dash. Thank you for supporting my new business. Now, let's get back to the interview. Basil, earlier you said that the country that has the largest exodus of high net worth individuals is China. What countries are they flocking to, and what is their asset class of choice?
So it's quite common that we have many millionaires leaving China. It's not something that hasn't happened before. We're expecting around 15,000 millionaires to leave China in 2024. The main reason is, some of them are seeking better pastures, better life, better economy, better government framework. So that's the reason that they're going. As well, it's a huge class of emerging millionaires. So millionaires are being created on a daily basis in China. So it's not necessarily unheard of. Historically, China was always seeking better pastures outside. Now, where are they going to? They love to go to Europe, right? So you have many that are applying through the Portugal Golden Visa Program, the Greece Golden Visa Program to get an alternative residence, the UAE. The United States is also a big inheritor or the country that inherits many of these Chinese nationals that don't want to relocate. So I would say it's quite equally dispersed around the world. India is also in a similar situation where they're number three, expecting 4,300. But again, high dense population like China. So and a lot of emerging millionaires. So it's quite normal. I would say the main anomaly is around 9,500 UK millionaires that are expected to leave in 2024, just due to the non-dom tax regime scare. Now that is quite interesting, and I can go a bit further. The Russian Federation. I mean, we've had an exodus essentially when the conflict had started. Now it's slowed down a little bit, but they still managed to be number five, worth 1,000 millionaires that are expected to leave. UAE had really taken advantage of that, booming the UAE with their luxury lifestyle and their tax regimes and their openness to Russian nationals. Now, maybe I'm going on a tangent. Let me know, Jack.
No, it's very
But
interesting.
when the conflict happened in Russia and Ukraine, Russians never thought that they would be blacklisted on many of these government programs. That all of a sudden they were on the blacklisting. You're not allowed to apply to A, B, and C countries. So I would say around 90% of the investment migration programs around there do not allow Russian nationals anymore. So if the Russian nationals that are trying to apply today had applied beforehand, then that would have involved residency and citizenship planning to get an alternative residence. And those that have the mobility around the world, have alternative passports, are able to get their kids into different schools. So when you use that as a concrete example, the US is a great country, but can we really say in the next 50 years that this will never happen to US citizens? That all of a sudden they're not allowed to get alternative residencies or citizenships because of XYZ political tensions? These are all possibilities. So our clients are starting to realize this and they're saying, well, insurance is provided when times are good. Now times are still good. Now it can be a time to diversify and get those residence or citizenships while they're still available. Because this just happened to Russian nationals, happened to Belarusians, happens. Individuals from Iran have difficulty getting different residencies and citizenships, right? So it's always good to diversify. It's just a problem that we've never really had before.
And this is probably not a problem for Americans right now, but for people living in countries such as Iran and Russia, that is a serious threat. Several high-profile Russian billionaires had to sell their soccer teams in the UK. They had their yacht seized, as well as I believe American citizens who own shares in Russian equities were completely bageled. How could alternative citizenship protect against that?
So that's a great question. Evidently, you're only allowed to renounce a citizenship when you have another. So if, for example, you were to have two or three, and then all of a sudden, your one of your citizenships are scrutinized, well, then you can renounce it. That would be a possibility to avoid, any prejudice when you travel. If there's a war that emerges in your country, or you want to open bank accounts, well, you'll have alternative options to open bank accounts as a different national. Now, all within the legal framework, of course, but these are things that provide options for you in the future. Now, yes, certain oligarchs, etc., had their yachts seized and this and that, but these are often profiles depending on the due diligence that may not have even been eligible for alternative residencies or citizenships. It really would depend. But there are many law-abiding citizens that still got rejected with no fault of their own. So just wealthy entrepreneurs that have done really well from Russia, from Iran, etc., followed the law to a T. All of a sudden, are banned in 90% of the countries.
Mm.
Right? So it just, I was speaking to a few of my Russian friends the other day, and they were saying the same thing, saying, we're having difficulty in the immigration process. I want to get this citizenship in this country, and they're going through more stringent due diligence. They're not treated the same way. Now, obviously, this is a matter out of their control, but it's something that is preventable in the event, when the doors open again. I can promise you that many Russian nationals would not want that to happen again to them, and they will be all applying for residencies and citizenships elsewhere. So they're not penalized in the event there's a war that emerges or there's a decision that's made on the country level and that affects everyone. And U.S. citizens should think exactly the same, right? Who knows what the future will look like? And we need to start preparing from now. Not that we want to relocate, but in the event we need to protect our wealth and most importantly, our families.
Thank you. And Basil, tell us about where do you fit in all of this? What are the services that Henley and Partners provide, and why might it make sense for people who are seeking to go this route, hire or use professionals such as yourself who are very experienced in this self instead of doing it DIYing and doing it attempting to take it, use these programs themselves?
So thanks for asking that, Jack. And I definitely would not do a DIY for any immigration process, because in the event you are putting your file forward to a government and you do it incorrectly, you can obtain a rejection, and that rejection sometimes can be very hard to overturn. And then also in any other immigration process, you have to declare that you were rejected from another application that can affect that current application, even if it's in a different country. So what does Henley and Partners do? We have multiple lines of business, but our main line of business is residency by investment and citizenship by investment. This is where we hold our clients' hands throughout the whole immigration process, make introductions to make sure that their investment takes place. We run a due diligence on the investment, make sure they're comfortable with it. We submit the file to the government on their behalf, and then we communicate the decision with them. And then we pick them up at the airport when they travel to the countries, bring them to the necessary appointments, make sure that everything is in place. So we have 59 offices around the world to service our clients. So our clients will have service within the United States, as we have multiple offices throughout, as well as in the country they're applying to. So they have the US support, as well as they have, example, the office in Spain will support them on their end if they're applying to Spain, or the office in Portugal, we're going to help them in Portugal. So we provide that as a core business. We also have educational relocation services. So if we have families that would like to relocate and find proper schools for their children, we can also help them do that. We have concierge services in the event they require, more white glove or hand holding when they do travel or when they do go through our processes. We can organize private jets. We can organize whatever they need when they do travel as your typical concierge. Lastly, we also have exclusive memberships that would share very interesting information on a global scale of geopolitical issues and tensions and financial matters and immigration matters around the world that they can also be a part of. So there are many different aspects to Henley, but I would say the core one is truly the immigration services through investments in 45 plus countries.
And those investments include real estate. For example, I mean, I don't know, and I don't think any of our viewers know any Antiguan real estate brokers, and you do, and that is
Yes.
very interesting. Basil, we are running an affiliate program for our viewers, so people can gain access to your services through me and Monetary Matters. So if people are interested in that, they can of course reach out to info@monetary-matters.com. And I also encourage them to check out your many research and publications. Your most recent report, the Millionaire Report 2024, had a lot of very interesting trends. I imagine the bull market in everything, in real estate, stocks, bonds, credit spreads narrowing. I imagine the amount of centimillionaires must be going up, right?
In terms of the Millionaire report, Jack, so the United States remains the number one superpower economically of the world. You're looking at a 62% growth rate of millionaires in the last 10 years. However, we do expect this to definitely shift and change over time. But however, I would say that the United States is still the place to be economically speaking. When you're looking at China, they've had a 92% growth rate in millionaires in the last 10 years. You're looking at India, an 85% growth rate in the last 10 years. And you're looking at the UAE with a 77% growth rate in the last 10 years. So you're seeing that there are quite a few emerging countries that are inheriting a lot of these millionaires, providing very interesting tax regimes and lifestyles. So diversifying isn't the worst idea. If you're looking at Switzerland, which is the seventh wealthiest country in the world in terms of the W15, they were farmlands 200 years ago. Could you imagine? And now they're the safe haven of the world. So it just puts things in perspective, saying that there can be shifts in power, there can be shifts in wealth, and we need to just think ahead and prepare for that. So the wealthy families are starting to put residence and citizenship planning in their portfolios, not just for the geopolitical risk, but also for wealth preservation.
I see the charts of how much US equities have outperformed European equities and the rest of the world. I see the charts of how the economy is growing much faster than many European economies. Germany's economy has been stagnating. Real GDP has been basically flat for 6 years. But I see that on the charts. I'm not talking to the clients and the families that you serve. Are you seeing that outperformance of US investment assets and the economy in the conversations you're having, or not so much?
Certainly. So the United States has always had a very strong financial market, and those around the world are still using the US dollar as a safe haven. So I certainly would say that, they're well aware that the United States provides that stability. Now, when you're looking at, example, the Swiss franc, I mean, it's extremely stable. If you're looking at the inflation numbers, the US had significant inflation where the Swiss franc remained rather stable. Right, and the interest rates in Switzerland had remained rather stable. If you're looking at the Swiss equity market, though it may not perform as well as the U.S. market, it still can be seen as a safe haven in order to invest different assets. So as we diversify our investments globally, I think it's also important to diversify the currencies, to diversify where we can live, where we can reside. Having different bank accounts to ensure that everything will be fine in the future in terms of change of regulations. But yes, to answer your question simply, the United States is still an excellent equity market, obviously very tech heavy. And many of my clients are looking outside, investing in Switzerland as an example, just to have other sectors, as their tech industry is quite small. Maybe they miss something, but they have a small tech industry, but they're very strong with healthcare. They're very strong with other aspects of the economy.
And I guess, is there an aspect of, if people are going to make an investment in other countries, why not do this passport program? Is that also an argument of, if you are going to be investing, $500,000 into Italian shares, you can get a passport as well if you meet certain thresholds. So why not just do it as a bonus? Is that also an argument?
100%. 100%. I mean, we have clients that have been investing in Spain, have been investing in Italy, have been investing in Greece and Turkey anyways, bought real estate, bought shares, but never applied for their residency or citizenship. So sometimes we just say, well, you're doing it anyways. Why don't we just apply for this as a quick, easy plan B? There are even routes without an investment that they can be looking at. So a couple of regions that we didn't discuss is Costa Rica. So many Americans are investing in Costa Rica, buying land by the water, investing in real estate as a vacation home. They don't know that that can lead to a residency. So they can have a residency of Costa Rica, a residency of Panama, while expanding their portfolio. So you hit the nail on the head, Jack. That's exactly it.
And Basil, what are countries that are the most recently added to having a program of a residency or a citizenship? I mean, Switzerland has been doing this for many years. Who are the newest entrants in this space?
So the ones that have been added to our shelf now, there are consistently other programs that are being created as we speak. Some of them I cannot disclose, as they will be upcoming. However, Hungary recently has a golden visa program. So that is quite popular for Russian nationals. So that's via real estate is the most popular route. Another popular one that we recently added to our shelf was Costa Rica and Panama. As many Americans, particularly, are looking into those regions due to familiarity, ease of travel, and having something in Central America is quite attractive to them. I mean, Costa Rica in the last, I wouldn't be able to confirm how many years, has not had an army, so that gives them some sort of peace of mind as well. Panama has a big US influence pegged to the US dollar. That also gives them a lot of comfort as well. So we often add that into the portfolio mix. In Latin America, particularly, Uruguay is quite attractive for Brazilians. They enjoy investing in Uruguay in order to have a residence there. It's considered the safe haven of Latin America. So those would be the most recent, I would say, additions. But it's a consistently evolving world that programs that exist today may not exist tomorrow. So when when the countries receive their quota, when they receive enough financing, when they created enough jobs, they can easily close their program. Portugal program almost closed last year, and they decided to remove real estate from the shelf, and now it's a VC fund as the real estate was getting too expensive for the locals. So I always like to say that when it's available, you should get it, because right now it's probably the cheapest it's ever going to be before it closes. Or if it is increasing in demand and people start to realize, like Portugal, they're going to raise their thresholds. Greece increase their thresholds. Turkey increase their thresholds. You have the UAE that likely will increase their thresholds, I would imagine, in the future due to the demand that they're getting. So it's always better to implement this in this within your strategy earlier than later, as what you were thinking about for a year may not exist.
And what are some of the biggest misconceptions that people have, the investing public has, about golden visa programs that you've encountered?
Yeah, sure. I'd say they're not sure that it's legal. They're not sure it's credible. But these are legitimate government programs that are in their legislations that they can invest in. And often, like we mentioned earlier, passport for sale. That's really not what it is. It's a country in need of financing, and you are being philanthropic by helping that country. And if isn't a form of an investment, you can generate return. And they thank you by providing a residence or a citizenship. And the way I like to legitimize it is the United States themselves have programs like this to attract foreign investors. That's the basis of the United States, is foreign investment. People coming here, investing significant amounts of money to create jobs and stimulate the economy. So it's okay to do it. The United States recognizes alternative residencies and citizenships. You can have as many as you'd like, as long as the other country does not have the restriction. So that's what I would say would be the major discrepancy or major misinformation that's out there in the industry.
Is that it is actually allowed? And yeah, tell us about that American program. People who are around the world, they want to come to America.
Sure, sure. So, but we focus on the buy investment routes. So there are pretty much two. So the EB5, which many do know, is it's been existing for quite some time. Without going into a rabbit hole, you're looking at approximately 800,000 US dollars into a project, and that project usually will need to create a certain amount of jobs. And once that investment has been through, they're on a pathway to obtain a green card within the United States, which typically I wouldn't be able to comment on processing times as the lawyer should comment on, but normally around 2 to 3 years to the green card process. Another route can be the E2 visa, where if you invest in a business and you actively run that business in the United States, you can obtain a visa, but that visa does not necessarily easily get you to a green card. In fact, it's very difficult to get to a green card. So our US lawyer typically goes through those different options with our clients and decides what makes the most sense. So that would be on the US side. But most of our clients that are in the United States, they're looking outside to diversify. But we do have quite a bit of inbound. As you've seen, the United States is number two in terms of incoming millionaires.
Hmm. And what are some programs around the world that are maybe closing? You talked about Portugal considered closing it this year, but then they made a minor tweak.
Certainly. So I wouldn't be able to comment on which ones that will be closing. Spain, particularly, there's been some in the news that they're reconsidering their program. So we're waiting on a reform of that program or closure of that program. So we have many clients that are rapidly buying real estate to get into the existing program to be grandfathered in. So to talk about the Spain program, you're looking at a simple 500,000 euro investment into real estate in Spain that can provide you a golden visa. And that could be done rather quickly. Within a couple of months, you will have your residency. So right now we're having quite big lineups for real estate in Spain prior to a potential closure of that program. So that would be one of them. Thresholds have also increased in the Caribbean recently, have almost doubled just due to the demand that they've received. But we don't foresee those programs closing in the near future. Greece will be increasing, well, they have increased and will be increasing the real estate thresholds as well. Turkey recently increased the real estate threshold due to the demand from Russia during the conflict, as they received many applications for Russian nationals to have Turkish citizenships. In terms of other closures, I wouldn't be able to comment on, but often, for example, the Malta program that can lead to citizenship has a certain quota of 400 per year that they're allowed to accept. Once that quota has been accomplished, then there would be no other applications that would be permissible. So it really would depend on the demand and the financing received.
Got another question for you, Basil. Let's say there's someone who, via one of these programs, has gotten citizenship. are there is their spouse a citizen? Is their children a citizen? Are their children's children citizens? How are these managed throughout lineages and generations?
Yes. So if they do obtain the citizenship, whether through a residence program or a direct citizenship program, the spouse usually in that investment program will also be able to get citizenship, and the children, as long as they're dependent, can be included in the same application. Now, in the event there are grandkids that come out later on, then this can be passed on by descent. As long as the children have the citizenship, it's a simple application with the consulate that they can apply, demonstrating that they are the son or daughter of citizens of Portugal or citizens of Malta. And that would just pass on to next generations as rule of thumb. Now, most European programs provide the citizenship by descent. Some Caribbean programs do provide the citizenship by descent, such as St. Kitts and Nevis provides that framework, Grenada provides that framework, and Antigua provides that framework with an additional cost. So these are all possibilities, and that's one of the main reasons that our clients do apply. Is they're not necessarily selfishly thinking of themselves, but they're saying, well, okay, I'll do this for me, I'll do this for my spouse, I'll do this for my kids, but also I'm preparing for my legacy, because the next generations will also get this citizenship, providing a plan B for my legacy.
Hmm. Why are so many people leaving the UK? I mean, this chart from the Financial Times, it has the data exactly as you referenced it. Most people are leaving. The country from which there's the largest exodus of wealth is China. The second most is the UK. Just what is it about the UK that so many millionaires and centimillionaires and billionaires are just saying, get me out of here?
So a couple things. I think we all heard about Brexit. That's the first thing, right? So some were for, some were against, and they lost access to the European Union. So a lot of people are saying, well, I want to regain that access. I used to spend my time in Spain. I used to spend my time in Portugal. Now you're removing that from my options. So that's one of the reasons. Now, the most recent reason is the change to the non-dom tax regime, the potential change in 2025, where it will not be as favorable in terms of taxation. So a lot of the wealthy will be leaving the UK, and we do expect 6,700 millionaires to be leaving the UK this year, into Italy, likely Greece, Switzerland, or the UAE that has favorable tax regimes. So many of these other countries that have these favorable tax regimes will benefit from all of these millionaires. And the millionaires don't just leave with their money; they leave with their expertise, they leave with their intelligence, they leave with their education, and that's what these other countries will be inheriting.
Hmm. Basil, you've got another report on the rise of crypto millionaires. The surge in cryptocurrency prices has made a lot of people very wealthy. Tell us, what are you finding there, and what are the major trends?
So, crypto investors are very interested in diversification. Now, one of the main reasons that investors have invested in crypto was for decentralization, right? Um, to have less influence of the central banks, to be less connected, and to sometimes the local currency of their country was too volatile, so they used it as a safe haven to invest in. So, in essence, the reason why they invested in cryptocurrency was for diversification and preservation of wealth, and also thinking about the future and technology. Now, we other countries may be cracking down on regulations with regards to crypto taxes, regulations. So crypto millionaires are looking at other options that may have more flexible rules for crypto millionaires, or cryptocurrencies rather, and they like the idea of diversifying where they can live. They don't think that they can live in one country with one currency. They want to have a worldwide currency and live wherever they'd like to live. So you see a lot of them having nomad visas, or getting multiple residencies and citizenships for favorable tax regimes. Sometimes they'll go to countries that have favorable crypto treatment, or more regulation for crypto if they prefer. Now, I wouldn't be able to comment on which countries those are, but there are a few countries that are developing that more actively than others.
Yes, and I can say it is widely perceived by the crypto community that the US over the past few years, under the current President Joe Biden, but in particular under the SEC, has been quite hostile to crypto. That is definitely a perception that is had within the crypto community. Basil, it's been so great getting you on Monetary Matters. I'm really grateful you came on, and I'm very glad we have a partnership program where people can find out more about your services by emailing us at info@monetary-matters.com. It helps the show, and we really appreciate if people watching this are interested in the services of Henley and Partners, that they do so through our program, especially at this early stage of the show. Basil, thank you so much for coming on Monetary Matters, and thank you everyone for watching.
Thank you, Jack.
Thank you. Just close the door.